Palisade Radio is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. As you can probably hear in my voice, I have a bit of the flu this week, but the show must go on. Joining us on the show is Jordan Roy-Byrne, editor of TheDailyGold.com. Jordan, thanks for joining us.
Colin, thanks for having me.
There's a lot going on today. Let us start with the dollar. The U.S. dollar index closed at 99 today, and that's just 1% away from making a new high. Does a breakout of this consolidation spell doom for gold investors?
Well, Colin, I think it's a strong question, but I think it does spell doom, at least in the short term. I mean, looking at the dollar, as you said, I think it closed at about 99.01 today. Its closing high is about 100.04, if I'm correct. And so the dollar is very close to breaking out to a new high. Remember, it had a really huge move from the summer of 2014 into 2015. It's been consolidating for a good 7-8 months, but it's held the bulk of those really large gains. I mean, it tested support around 92 a couple times, and I mean, now after consolidating for 7 or 8 months, it's back at 99, very close to breaking out. And so I do think it's likely that it's going to break out here, if not in the next couple of days and probably in the next couple of weeks. If it breaks out, it's going to be close to, I think, a 12-year high. And I think it could, if it does break out, there's good potential to have an explosive move higher. If you look at a long-term chart, the consolidation that it's had over the last 7-8 months or so, it's a potential bull flag. That's a very bullish type of consolidation pattern, and what that means is a bull flag basically separates two very strong moves, and we already had the first strong move. So the second strong move could take the U.S. dollar up to 120. And on the flip side, looking at gold and silver, they're obviously extremely oversold in the short term, but they've really struggled to rally and just even rebound a tiny bit here in the last 5-6 trading days. And and again, I mean, they're on the cusp of new lows in this bear market, and the dollar's on the cusp of new highs. I mean, you know, it doesn't take a genius to see what can potentially happen here over the next month or so. And again, potentially very bullish for the dollar, and that would be very ugly for precious metals here in the near term.
Jordan, I would think that the dollar is almost certainly rallying on expectations of a Fed rate hike in December. Kind of two questions here for you. If the Fed does not actually hike rates in December, do you think that this dollar rally will come back off? And also, if the rate hike goes forward, does that spell further doom for gold?
Well, with the way the markets are acting, they're basically pricing in a potential rate hike in December, as you noted. If they pull back from that, obviously gold and silver would probably have a rally. And at the same time, the dollar would probably pull back. It would fall back into its consolidation. If they don't hike rates, I don't think that is going to be enough to end. I mean, that by itself, I don't think is going to end the bear market in precious metals. And it's not just the Fed. I mean, if you look at the other central banks around the world, I mean, they're cutting interest rates. They're doing QE. I mean, they're doing both or one or the other. And so the Fed hasn't even hiked rates for almost 8, 9, 10 years, whatever. And the dollar, I mean, even in the last year or so, the dollar has surged, and the Fed has not been hiking rates, even though, you know, they tell the market, we're going to hike. Okay, we're not going to hike. We're going to hike. You know, now we're going to hike. Well, we're not going to hike. Even despite that, the dollar has been really strong. And so that's more of a function of the rest of the world cutting rates and going to easier policy than the Fed hiking rates itself. So I think that's something we have to keep in mind. And if they do, I mean, looking further out, fundamentally what needs to happen for gold, if the Fed's going to hike rates and then they hike rates a couple times next year, maybe let's say 2 or 3 times, what needs to happen for gold to go higher is we need to start to see inflation rise faster than rates and yields. And of course, the Fed, they want to hike rates when they see inflation is going up. So in that scenario, if they hike rates a couple times, you want to see inflation rising faster than rates and yields. Now, on the flip side, let's say they hike once and then next year they chicken out and say they can't hike rates again. Well, that would be bullish for precious metals also, because the market's, it's bidding rates higher, yields have been going higher, bond prices have been going lower, and if they hike rates and say in December and say that they're going to hike rates again early next year, then interest rates and the Fed funds rate, I mean, they're probably going to continue to push higher. And so if the Fed doesn't about face on that sometime next year, and something happens in the economy, or there's a negative situation developing and they can't hike rates anymore, then that would obviously be bullish for precious metals, because then yields and rates would be going a lot lower. So fundamentally, those are the two potential scenarios, I think, for precious metals as we head into next year. But I prefer to see the Fed hike rates and possibly hike rates a couple times, because most of that is already priced into the market, in my opinion. I mean, it certainly could be enough. It could be enough here to push the dollar to that huge breakout I'm talking about, and then push precious metals a lot lower. But I think once we get that out of the way, I mean, you're gonna, like I said, the news has already been priced into the market, and then that would set up the potential for inflation to potentially rise faster than yields. And of course, that would be bullish for precious metals. And I mean, in that scenario, if the Fed hikes a couple times, then I mean, all the money, all the traders and, dumb money, so to speak, in precious metals, they're all going to sell out. And then that would allow the market to clear at a lower level and then give it a better chance to, rebound and then start a new bull market.
Another major event for gold investors was there was a new daily and weekly low made today of 1081. That's about $3 lower than the previous low. Jordan, what are the implications? I know we've already been touching on this, but could this be a double bottom, or is this almost certainly gold going lower?
It's definitely not a double bottom. I mean, I don't want to get into that, but it's definitely not a double bottom. It's very interesting because as I said, over the last 5 or 6 days, I mean, gold and silver, they've both been really oversold, and they just haven't been able to rally that much. I mean, we've kind of seen in this last 5 or 6 days, I would call it bearish consolidation, if anything. I mean, I wrote an article last Friday saying the precious metals are oversold. We're probably going to see a bounce here, at least a bounce or a pause in the decline. And so we've kind of seen a pause in the decline, but still in the last 3-4 days, I mean, gold is kind of it's consolidating, but with a lower bias. And the fact that gold closed at a new daily low today and a new weekly low, I mean, we could potentially see starting next week, maybe some kind of, I don't want to say a flash crash, but gold has support at 1080, as we know. It hasn't closed below that, although it's closed at a new low. The next key support is 1040. So, I mean, one scenario is we finally do get a rally next week. The other scenario could be gold breaks lower immediately on Monday in Asian trading, and it falls to 1040, and then it would be extremely oversold, and then maybe it consolidates between 1040 to 1080. So it's a tricky situation because the market is obviously extremely oversold in the short term and due to bounce, and it has not bounced. And that being said, the biggest declines in markets and crashes, I'm not saying we're going to crash, but the biggest declines and crashes happen when the market is really oversold and it fails to bounce. So I would not be surprised if in the next day or two, if gold went through a trap door and went down to 1040 or so, and you saw the same thing with silver. And at that point, then you would get a rebound for a little while. So very tricky situation. And potentially really bearish over the next day or two.
Now, the gold stocks are even more perplexing for investors. I mean, as you just pointed out, the gold chart clearly not a double bottom. A lot of weakness is sustained, and there could be a big drop-off. But a lot of these stocks are still a good bit off of their 52-week low. If gold goes to 1040, do you think the 52-week lows that are already in will hold? And if gold goes below, like what point do you see that gold stocks are going to just crash as well?
Yeah, very good questions. One thing I want to note, if you look at gold stocks against gold and you look at a linear chart going back, I had this in an update about a month ago. The gold stocks against gold ratio, or let's just say if you're looking at gold divided by gold stocks, that ratio went parabolic in the last several months. So it's possible that the underperformance of gold stocks against gold is pretty much over, but I mean, I could be wrong on that. So that's something to keep in mind. But even given that, if we see gold break to a new low, the miners are also very likely to move lower. The thing with the miners, which is really interesting, I mean, let's look at the ETFs. You have GDX, which is kind of the seniors and the majors and the unhedged ones. Then you have GDXJ, which is kind of the larger juniors. Another interesting ETF is GLDX. It's a much, much smaller ETF than both these ETFs, but that has some quality exploration and development companies within it, and that's been performing a lot better. Also, if you look at GDXJ to GDXJ has been performing a lot better. And the reason for that is the problem with the majors right now is they have a lot of debt. And so when gold goes lower, they get into a more precarious financial situation. Whereas if you're a junior company and you have enough cash, obviously if gold goes to 970 or 1,000, I mean that's obviously bad for you if you're a junior company. But if you have enough cash, that doesn't really change your financial situation. So some of these smaller companies and these quality juniors who have enough cash for the next year or two, they're going to be hurt much less than the majors if we see gold break lower and trade below 1,000. So that's something to keep in mind. And so when I'm going short the market and I'm looking to hedge, I'm always going against GDX rather than GDXJ. Again, I mean, if we see the metals break lower, the miners are likely to follow. But I think GLDX and GDXJ, those are likely to hold up a lot better than GDX because, I mean, some of those, if gold keeps going lower, I mean, some of these companies, they're going to be in trouble as far as trying to pay their debt back. I mean, you see gold go below 1,000 or trade at 1,000 for a quarter or so. These larger companies are not going to be making the cash flow that they need to make to repay this debt. So I think so just to confirm what I've probably already said, the majors and the companies with debt are a lot more vulnerable to lower gold prices.
And just a note for our listeners, I'm a big supporter of Jordan's work. We get a lot of our information and charts from Jordan. Jordan's called many of the shock sell-offs in these gold stocks, especially the one that came in the summer. And he uses a lot of tools such as the inverse ETFs like JDust and DSLV. Also, Jordan just mentioned Barrick and Newmont, not necessarily the best place for your money just because they're the biggest in the industry. A lot of smaller quality juniors are loaded with cash right now and are producing cash flow, and Jordan can help you to identify those stocks. Jordan, any other notes you have to add right now?
Well, Colin, it's been a very difficult bear market, and I think where we are right now, there's still potential for this bear market to continue. I mean, a couple things. Number one, actually 3 bear markets in gold have lasted a full 5 years. This would be the 4th one. I mean, 5 years puts us out to next summer. I don't know if it's going to last that long, but I'm just telling you some history so we can put this bear market in proper context. And looking at the monthly chart of gold and also looking at retracements from the 2001 bottom and also the 1970 low in gold, the 2 really strong targets I have are the first one is $970 an ounce, and the next one would be $890 an ounce. So those are kind of the 2 potential bottom targets I'm looking at here over the next couple months.
Sounds good. Jordan, enjoy your weekend, and we'll have to see how gold and gold stocks play out next week.
Thanks for having me on, Colin.
think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen? Or are you too stupid?